welcome to the Tearsheet Podcast here on site, the second day of the FIS Emerald Conference 2025. I'm Zach Miller, Tearsheet's editor-in-chief, and today we're going to be talking about reclaiming commercial lending, how banks can compete with tech. Joining me is Héctor Pagés, SVP, Head of Global Commercial Lending at FIS. Welcome, Héctor.
Thank you, thank you.
And in today's evolving financial landscape, banks face unprecedented challenges in commercial lending from private credit providers and fintech disruptors. Hear from Héctor Pagés, SVP and Head of Global Commercial Lending at FIS, as we explore how unified lending and strategic partnerships help banks turn static portfolios into growth engines amid regulatory and market pressures. We'll address emerging strategies, including AI-driven loan underwriting, data flows for risk management, and cloud technologies for optimized record keeping and faster execution. So let's kick it off by just tell me a little bit about yourself.
Sure thing. So as you said, Héctor Pagés, Head of Global Commercial Lending at FIS. I've been in the company for about 4.5 years. I am the head of product and strategy for our commercial lending business here, which is quite expansive, as I'll share. And I oversee all of our product direction, our product strategy, our commercialization, and driving our unified lending strategy here at the company.
So welcome to the show, first of all.
Thank you.
I'm happy to talk to you. And I'm excited.
Heard great things. I'm so excited to be here.
We talk a lot about commercial lending on our podcast, so it's actually a topic that we cover a lot. And I'm kind of curious over the past 4 years how you've seen things evolve. Sure. It feels like there's been a lot of change over the past 4 years.
There has been a ton of change over the past few years. I would say that, banks are really evolving to, and with a lot of the trends that they're seeing in the marketplace, it's shaping the landscape for them, whether it's, the rise of AI, the, rise of private credit and fintech competitors for them, the, ever-changing regulatory landscape, tariff, rate uncertainty. I mean, there's no
a lot of stuff to deal with.
Yeah, there's no shortage of challenges for banks as they're not only thinking about how to run their own businesses, but certainly what that means and what that implies for, their lending strategies.
So that's the challenges side, and obviously with every challenge, there's opportunities as well. How would you describe some of those opportunities amid those challenges?
Sure thing. I think, what we're hearing from our banks as we're speaking with them is, one of the good things is banks are not short-term thinkers, right? And so
very methodical,
very long-term. And so I think some of the whipsaw that we're seeing around the tariffs obviously is having a knock-on effect on volumes and how comfortable small businesses and consumers are feeling about the economy and how much they want to or need to lend. But as it comes to preparing for the long haul, we're not seeing a slowdown in terms of interest or investment from our institutions in terms of advancing and changing the ways that they're working. That may be implementing AI. It may be looking for back office and mid office, automation and efficiency. It may be looking to implement new systems to replace manual systems and almost use this period of uncertainty as an opportunity to invest now to put themselves in a more attractive position or successful position as we enter what a lot of people are saying is a new credit life cycle or new credit cycle.
So amid that, does that mean that banks are changing the way they look at prioritizing commercial lending, maybe in the portfolio of all the services that they provide?
It is. So a few things that are happening there. You have some banks who've traditionally been more larger retail banks, shifting more focus and investment into the commercial side of their business. You have commercial banks who might be, perhaps smaller in footprint and size, who are now trying to get into more types of complex lending. And then you have other banks that are looking to, as we call it, originate to distribute, and look at how can we consume and bring on more loans and help originate, and then partner with certain entities to distribute and spread that risk and drive more fee income. So the diversification that they're looking for in lending is certainly shifting them further into commercial lending and into different types of commercial lending.
Awesome. And we have tracked on our podcast at Tearsheet the rise of non-bank lenders, whether it's through private credit or fintech lenders. And I'm curious how you're seeing the evolution of that part of the industry reshape commercial lending in general.
Yeah, no, it's a fair point, and I think at this show that we're at, our Emerald Momentum Conference, we are getting a lot of questions around private credit from our banks, and listen, there's certainly a foundational or fundamental shift that's happening. I think the private credit space today is about $1.5 trillion. We expect that to reach about $3 to $3.5 trillion by 2028 into 2029.
Wow.
that capital is not all coming from, new sources. A lot of that is shifting
It's
from
kind of being
traditional
cannibalized,
forms,
I guess.
a little bit of cannibalization. And so what do the banks, how do they feel about that? Obviously, initially it's competitive, but I think a few things. One, uh, there ultimately will be regulation that comes in to help, balance some of what we're seeing in that growth and potentially additional risk that's rising in private equity and private credits. If that additional regulation doesn't come there, you may also get easing of regulations on banks, right? You
Right.
can't have this system where trillions of dollars are flowing to one other side that is going unchecked. And so I think a lot of banks are looking forward to seeing what happens with that regulation. The other thing that's happening is more of traditional banks are getting in the private credit game. And how are they doing that? Doing it in a number of ways. One is they're leveraging fund finance, so they may be themselves directly investing into funds that are being populated with private credit assets, and some of those capabilities are in our platforms. They do that with our platforms, and we're helping them do that. And then other larger institutions, but we're seeing all kinds of different creative approaches to this, are creating partnerships with large private equity firms, and essentially back to my point of originate to distribute, being that front end engine to drive loan growth, but then dispersing that through their partnerships. So that's been a very, very fast growing space.
Uh, I appreciate the way you explain that, and it sounds like there's a lot of opportunity for growth there as well.
Absolutely,
Um,
absolutely.
and one of the things we've always taken the approach at Tearsheet is there was never David versus Goliath. It was never banks versus fintechs. It was never verse. It was always long term had to be collaborative. And it sounds like even as some of these new forms of credit emerge, there's still ways to partner. And so each side of the market can do what they do well, right?
Correct, correct. Yeah, and there's, I think as these large private equities are, as you see this arrival of this immense amount of capital, it's already being securitized. It's already having the need to have distribution capabilities to it, and so that's getting pushed further into
That's a
the
sign
buy
of a healthy,
side.
mature market that they have that.
Signs of a healthy,
Yeah.
mature market, and signs of more controls coming into the market. I
Mhm.
think one of the risks that a lot of folks are wary of is if we don't have enough controls and enough um, oversight into what's happening, will that become a next runaway mine train? It may be too soon to call it that, but yeah.
Hector, I want to ask you about how banks can leverage end-to-end lending solutions and how real-time data can improve decision making and risk management.
Sure thing. So this is something that we really pride ourselves on at FIS, and part of the solution that I think that we're bringing to the market. I will say first that our lending position at FIS is 15 different products, large products that run front, middle, back office for multiple types of asset classes, whether you're in retail, commercial, asset and auto, or supply chain. And we're really thinking about it from end to end. What you find in the market today is that institutions are being approached with what I would call pure play providers, right? Hey, I'm best in credit assessment, or I'm best in origination or servicing or syndication products. Banks don't really think about it that way. Banks think about it as an end to end. I need to attract customers. I got to, book a loan. I've got to originate a loan. I've got to price it. I've got to book it. I've got to move it into servicing, and then I may want to distribute it or syndicate that loan. We are bringing an end-to-end solution to the market that not only offers that end-to-end scale, but integrates those different points of the process so that there's automation and efficiency, which every bank cares about, and you're not manually pushing things through one application or another.
Got it. Um, I have to say, over the past 14 months, and this is true of the 2 days we've spent here on the
Uh,
ground in Orlando, we haven't had a podcast where AI and automation hasn't arisen,
okay.
and bankers themselves want to talk about that, which is a big change. So
Yeah.
I'm curious how FIS is helping your clients adopt AI and automation to enhance specifically in loan origination, underwriting, and servicing.
So we're going to talk about AI now and make sure we go 10 for 10 on these.
Exactly. Let's do it. Let's do it.
So with AI,
Check. Yeah.
yes, yeah, check. With AI, yes, again, certainly AI is one of the larger trends that we're seeing, in the market. It's not only powering fintech use cases, which
Hmm.
ultimately then accelerates their speed to market, which could be competitive to banks, but pressure from larger players who are already embedding it in different parts of their business. FIS is taking a leading approach to AI. We are looking at AI across the lending lifecycle. We're doing it through very strong partnerships that we have with companies like Microsoft,
Hmm.
their Copilot product. And we're looking for opportunities to, again, create as much value as we can for our bankers. We're staying very close to our institutions and asking them what would make sense to automate or make more efficient. And a few of those use cases, if I can share them with you,
Please, love to hear.
are things like in the front office. So how can we use AI to automate credit decisioning? Of course, up to a predetermined limit by the institution, based on what we see in the credit application. Can we just go ahead and approve loans up to
Mhm.
$500,000? We're seeing in the underwriting process the ability to automatically spread, which is where you're pulling all the different documentation and documents and statements from the borrower to look at their credit worthiness, automating that. The credit memo posting process, when you're done with that whole process, it's a very manual process in most instances, and a big part of the overall credit workflow to go and do the memo creation. We can automate that. One of the things that we're most excited about is a product called Lender's Copilot, again in conjunction with Microsoft, which is an agentic chat experience that we're building on top of our commercial loan servicing platform that allows a banker to pull up data from multiple different data sources and make real-time informed decisions on a loan book or a borrower versus having to dig down into all these different data sources. So we're very much putting it into play, but I would say that we're measured in terms of also thinking about the risk and controls side of the
Of
data
course, right.
for these AI models.
And it sounds like you have both models of like independent AI and also like hybrid with human interaction as well, like on that last example that you gave.
We do, yeah. Some of these may be more closed loop where
Mhm.
it's helping to facilitate an action and there doesn't need to be much interaction. And then
Mhm.
there's others where it's more free flowing. And again, within FIS, we have a framework that we're following that makes sure that we build in a level of auditability and traceability so that if something happens in the middle of an interaction and a chatbot told an agent in a bank something and they've gone and made an action, how do you trace
Mhm.
where that interaction occurred? And then also risk and controls around partitioning so that we're not sharing data between client segments.
It's really interesting. I enjoy speaking to people in the lending space because when you talk about AI, they're like, well, we've been using AI for years in certain forms, like, okay, now it's generative AI. It's a different type
Right,
of animal, but like
right.
we've been doing AI forever, particularly in credit, credit models and stuff like that. Are you finding that your clients, is it push pull right now? How are you feeling your clients are approaching AI?
It's a great question. Listen, I think that FIS ends up sometimes modeling a bit after our clients, and our clients are institutions,
Sure.
different types of institutions, and institutions don't love risk.
Right.
And so, in some instances, that means that
But they like efficiency.
they like efficiency,
Yeah.
and that's where this balance is between. There's a lot of excitement for AI, but introducing it and where do we put it in, and how do we make sure that that follows our risk controls within the bank is something that we're helping guide them through.
It's interesting. So you said you've sort of followed the lead of your clients, which you have to, like the industry sets, but you're also, assume some clients look to you to set the tone too, in a way, because you are a hub of all these institutions as
We
well.
do,
So
we
like,
are, yeah.
there's a definitive work there, even though you're working to service your clients. You're also an exemplar in the market.
We are, and I think that's one of the great assets that FIS has is our breadth and scale in terms of the number of institutions that we serve. Not only are we proudly a systemic part of keeping up the U.S. economy and global economy, we also serve as that form of innovation for our clients. In a lot of instances, we will be working with leading institutions, and leading institutions don't always have to be large institutions.
Right.
Leading institutions, it may be a $5 billion bank who's innovating in their space, in the credit ag space.
Hmm.
We sponsor a lot of client user groups and communities where we can then share, here's some use cases that we're doing in this type of specialty lending, sharing that with other clients, giving them the opportunity to learn, and then possibly step into that kind of work.
I want to shift gears to talk a little bit more about cloud and open architecture
Sure.
and get your perspective on how those two things play in helping banks remain agile amid regulatory and market shifts.
Sure, sure, sure. Within cloud, it's an investment area that we've spent a lot of time and effort in over the last several years. First, it started with us really consolidating a lot of our data centers so that we could drive more efficiency and performance for our clients. And then it started getting into some of the public cloud
Hmm.
partnerships. So Azure from Microsoft, for instance, is one of our larger partnerships. I would say as an example of where that's helping us to drive scale for our clients is in international markets, for instance. So in APAC, for instance, certain markets have very specific data privacy laws and need to have data partitioned and in country. And for us to go open a data center in Malaysia doesn't make a lot of sense. But if we have a partnership with Azure and Microsoft, and we have a large bank in Malaysia who wants to run commercial lending, we need to be able to have those options and the flexibility to stand them up and operate their system. And so we've been spending a lot of time certifying with those partners, have certification with Azure and several of our different products, and that gives our clients more flexibility, more latitude from an infrastructure standpoint.
You sort of allude to an issue. I'm just curious to hear your perspective on it. Like, because you're global yourself, and lending is so domestic in form, right? Regulations, markets. How you balance that as an institution, being able to how quickly you move and how you allocate resources, because the world doesn't move at the same pace and in different markets. Like, how do you think about globalization from that perspective?
Sure, sure. What's interesting about that question is if, if the governments are introducing GDPR or ISO, 222, or if there's any new protocols that are needed, usually you see those happening a few years down the
Right.
road, and it takes that long for the market to adopt those.
Makes sense.
Seldomly do you have a regulatory change that happens immediately. What you may have regulatorily is a regulator come in and want to do a risk review or an audit, and those can happen, right,
Hmm.
all of a sudden. And we have a lot of systems and folks here who help us respond and help our clients respond to the call. But most of those regulatory changes you see happening, and we usually have the time ahead to build in those protocols and those mechanisms into our products and roll those out at the pace that our institutions expect them to.
Awesome. I want to ask you about FIS's unified lending solution and how it's helping banks build more flexible architectures that can adapt to some of the market volatility that we're seeing
Sure,
today. Yeah.
sure. We're very excited about the unified lending strategy. So one of the things at FIS, I call it the biggest story not being told, is that we are lending. FIS is lending. We have over 15 different assets, as I mentioned earlier, that generate a significant amount of our revenue. And we haven't been telling the story about what those products are, how they extend across the life cycle for our banks, and the coverage that we provide. So just over the last several months, we've been working to put together this strategy. And it combines areas of focus around retail lending, commercial lending, asset and auto equipment finance lending, and supply chain finance, looking at front, middle, and back office coverage, integrating the end-to-end workflow, and a technology strategy that looks at three areas. One, creating a seamless front end so that the end customers or borrowers of the bank aren't seeing a different experience when they jump around to different products that they're consuming at the institution. The second is integrating enterprise lending capabilities, so Customer 360, enterprise collateral management, that gives our institutions a more complete view of their borrower, and also gives them the opportunity to target and cross-sell, upsell that customer. And then the third is more internal to us, which is the integrations that we're doing between our own systems. So if we have a commercial loan servicing system over here, is it integrated into the commercial online banking system so that a borrower can see their real-time balances and real-time data and the transactions that they made, and they don't have to call the contact center at the bank? Is it integrated into the GL and the cores that we have so that we have straight through processing and we don't have to have additional manual effort from our banks to go type everything in from one system to another? So we are being very thoughtful about not only what are the products that are going to be the heroes of our lending future and for our clients, but how are we also integrating those, and what's the roadmap over the next 3 years so that we can ultimately help our clients grow and more importantly, unlock the value of their loan portfolios.
That makes a lot of sense. And as we're getting to the end of the conversation, I want to ask you about your partnership strategy and how
Sure.
that's helping to accelerate, go to market around the world.
Absolutely. The partnership strategy is very strong. I would say our partnership strategy breaks into a few buckets. One is inorganically. We are being very aggressive in looking at firms that fill capability gaps that we haven't had before. So we made an acquisition of a excellent firm called Demica
Hmm.
in the end of last year. Matt Rafer is the CEO of that firm, great guy. And they provide a very fit for purpose, out of the box, multi tenant supply chain finance solution that allows institutions to almost right out of the box allow them to assist their customers with lines of credit against their cash flows. and deepen their relationships with their most critical commercial customers. We're also partnering with leading fintechs. So whether that be Amount, for instance, or Lendio or Llama for SMB origination, or Namu 21 for document verification and workflow generation. And then we're also partnering with SIs. So we're being very intentional about those last mile deliveries, right? Malaysia, certain parts of Europe where we're still growing our operational footprint. How can we use their expertise? So you're thinking about your large consulting firms to go and implement our products and help us scale and help those clients that they're already embedded with and working with. So it's really a cohesive strategy looking at organic and inorganic approaches in our partnership approach.
Hector, we've ended our podcast over the past couple of days with probably the most important question, and part of the reason a lot of people are gathered around outside.
Okay.
I want to ask it to you. Who is your favorite Disney character and why?
Oh man.
Could be any cartoon, doesn't have to be Disney.
Favorite Disney character. I'm gonna say Nemo.
Okay.
Okay.
First time we've heard that.
Nemo, because I grew up in Puerto Rico. I was always snorkeling as a kid on coral reefs, and just have that movie was very vivid for me and brought a lot of things back. But I think the character, even though he got knocked down, right, and he had this weakness, he was able to rise to the occasion and rise to the moment. And I don't know, maybe I sort of self-reflect a bit on being able to do that. So.
That's awesome. Hector, thanks for joining us on the Tear Sheet Podcast today.
Thank you.
Thank you.
Pleasure.
Woo!